With the dollar steamrolling all other major currencies last week, this week the US dollar index is the chart in focus, and we're going to explain what the US dollar index is and why you should be watching it. So if that sounds interesting to you, go ahead and follow us on your favorite social media channel, and don't forget to like the video at the end. The US dollar index was developed by the US Federal Reserve in 1973 to measure the trade-weighted average value of the US dollar against a basket of major currencies, making the index a pretty good tool for measuring the US dollar's global strength. So let's take a look at those major currencies that make up the basket. It's obvious by looking at that chart that the euro makes up the largest portion. Why? Because at the start of 1999, the basket was revised to include the euro as a sole currency for 19 member states of the European Union. Many say the index is due another revision to include the currencies of other major trading partners like China, Mexico and Brazil. The US dollar index has its own chart, and when the market outlook for the US dollar is unclear, more often times than not, the dollar index provides a better picture. To get an idea of the relative strength of the US dollar using the chart, when the US dollar index goes up, the dollar is generally gaining strength around the world, and with the dollar index strongly weighted to the euro, there is a strong inverse correlation to the euro dollar, as shown in this chart comparing the price movement of the US dollar index and the euro dollar on a weekly chart. This inverse correlation is also apparent on the pound dollar and even the AUD USD, which is not one of those currencies in the basket. The index also displays a direct relationship to the dollar yen, dollar CAD and the dollar Swissy. To sum it all up, the dollar index is a key indicator for the direction of the US dollar. So why are we watching the US dollar index this week? Starting with the weekly chart, the index has been in a period of sideways price action since 2015. Looking closer at this price action, we've noticed the formation of a potential head and shoulders pattern developing on this chart. Focusing on this potential right shoulder area, it's on the daily chart price action becomes clearer. Markets on Friday were focused on whether this key resistance area here would break. With the morning session underway, this area looked like it had broken. However, by the end of the US trading session, sellers had taken control and pushed the index back lower, leaving us with this triple top formation, which gives added weight to a potential right shoulder forming. Now if you trade any one of those index related basket currencies or other dollar related pairs, then this chart will be the one to watch in upcoming weeks. Don't forget to follow our channel to find out how you can trade the markets in just 10 minutes a day. To trade like a pro in just 10 minutes a day, visit our website and join our Pro Trader program today.